Welcome back, everyone, to Vox Markets. My name is Paul Jourdan, and by popular demand, I am delighted again to be able to speak to Paul Jourdan, founder and CEO of Amati Global, one of the UK's finest small and mid-cap investors. So welcome, Paul.
Thank you, Paul. Really nice to be on again.
Yeah, well, on Friday's a US job report came in stronger than expected, and despite obviously all the increases in COVID infection rates around the world, and the US 10-year yield on the Treasury ticked up to sort of 1.3%. Just sort of big picture, can you just take us through your latest view in terms of equities going forward, particularly the sweet spot of Amati and small and mid caps?
Well, yeah, we obviously keep an eye on the long bonds in the US. It's a pretty key instrument really for reading the equity market. I mean, obviously, long, medium term, there are worries about what happens when that long bond rate rises. In the context of super low long-term US rates, then equities look pretty sensibly priced. But, obviously we're aware that that can change, and everybody, every investor is as well. So that's, the bull markets, as they say, are climbing a wall of worry, and that's certainly on the worry list.
Yeah. And then another area it seems to sort of be on a bit of a crest of the wave of late, particularly in sort of the US and the UK, is the IPO market. And I did notice that Amati's been pretty active, sort of picking its spots in that particular area. And one which sort of caught my eye over the last few weeks, just as we could kick off with, is Saietta, which I believe does sort of like axial flux next generation electric motors for EVs. Can you just take us through the investment thesis on that one?
Yeah, I mean, Saietta is very close to our hearts. It's a company that we got to know early this year, and you probably know that in the VCT we've been very reluctant to invest in companies before they float for many years. And this year we decided that actually there's a case to be made, and we've actually developed a process for investing in companies before they float. And one of the intentions behind that is actually to help companies to float. And it's not an easy process for businesses. A company like Saietta as Vic, I think, told you on
yes,
your
the CEO,
interview,
Vic Kist.
It's been in what he calls stealth mode for a number of years, where they were developing this amazing design of motor, and then they felt that they'd finished it, and so they needed to raise money, but the company was in a position financially where it needed a bit more financial resource in order to take the risk of floating. And so Amati VCT got involved. We gave them, the financial comfort they needed to float. And then, as you'll know, they raised 37 million when they floated. So it's been a tremendous success. Yeah. I mean, but I suppose what we're interested in doing, and maybe some of your viewers are interested in this as well, but we're really interested in trying to identify some of the key technologies for energy transition. And this whole roadmap to net zero in 2050 is still very confusing. It's not clear how it's going to work. There's a lot of new stuff going to be needed. We know that in terms of which technologies are going to win out. Of course, it's yet to be seen. But we know that there are going to be some massive winners in that transition from fossil fuels to electricity as the primary source of energy. And when we came across Saietta, we just figured, well, if you've got even one of the best new designs of electric motor in the world, that's going to be a fantastic place to be, because we're going to need to move, many millions or hundreds of millions of motors that are combustion engines at the moment to electric. And
one of their sort of like areas of expertise seems to be there because they've got a high density on their magnetic field. It gives high performance, but also the design, I understand, is low cost, and it's one of the few then that allows them to attack the Asian and particularly the Indian 2- and 3-wheeler sort of like motorbike area and the tuk-tuks. But equally, because the performance is so good, even the high performance sort of like supercars and outboard motors actually. So it just shows you what the applicability is of this technology.
Yeah, one of the photos that I love from their slide deck is of the standard mode of transport in India, and it's a picture of a motorbike. It's a classic kind of probably 110, 125 cc type bike, but it's got sort of 6 people on it. It's the entire family, right? And that is the family mode of transport for many households. Yeah. So the numbers of those kind of vehicles that are sold are are vast.
Tens of millions, yeah.
Yeah, so it's probably one of the most important kinds of vehicle to turn electric. And the challenges are really significant because if the motor costs too much, it's not going to work.
Yeah.
And so it's really, the cost down is crucial. But also what I like about Saietta is, you know, a lot of things you have to be very technically minded to understand, but there's something, you know, I think every one of your listeners will understand why an axial flux motor has more torque density than a radial one. Is just because the point of leverage is for the point of where the power gets applied is further away from the axle. So it's just like if you're any kind of lever, the longer the lever, the more power, and basically an axial flux motor has more leverage on the axle. So it's not surprising that it turns out to be a better way of designing the motor.
Yeah, I just on an overlay on valuation, I just saw the current market cap of Saietta is about 154 million as of today, and I saw one of its competitors, just floated on Nasdaq for 3 billion, and likewise another one, Yasa, which is a spin out from Oxford University, just got bought out by the Mercedes, I think it was. So there's plenty of opportunities. Another one which is sort of like on the IT theme was Northcoders, which floated, which I think is going to help the whole country, the UK, transition its sort of workforce and reskill the workforce into sort of software, sort of like programming and stuff like that. And can you just again take us through that one, because that should be a huge tailwind, you'd have thought.
Yes, I mean, Northcoders got some young founders in there, young entrepreneurs who've created this business. It's referenced very well. They do training for people new to IT who want to get some serious training in different programming languages. They do apprenticeships, and it's very much in that kind of core training area in the UK that these kind of companies make a very positive impact, and so we like them for that reason. The Northcoders had a tough 2020. The pandemic, held their business plan back by maybe a year and a bit. It's just getting going again, and obviously the need for this training is absolutely acute. And I think it should have a much better year this year now the vaccination program's got as far as it has. So it's floated, reasonably early days. It's the kind of thing that the VST is there for, really, and it's a VST investment for us. We're hoping that they're going to get up to sort of some kind of critical mass. It's very important when a company like that floats on AIM that the journey to get to sort of 40, 50 million market cap isn't too long. And, the Northcoders should hopefully go on that journey over the next few years. Yeah,
well, as I say, with hopefully some good online and some good face-to-face, which I think they do sort of 3-month courses, don't they, which they sort of it's helping the government with apprentice schemes, but also helping people reorientate their skill set. So, it should be a good investment, but also help for the country sort of like reorientate more towards STEM. Another one on the sort of software theme was Glantus, which was quite interesting actually, because as you get one coming into the market, because it does sort of software for accounts payable systems and also the big data on the back of it. It's sort of like you've had that one coming on, but you've also had Proactis. It's a similar sort of business, just bought out by Pollen Street Capital. So it's quite interesting that this is getting quite a lot of M&A activity as well.
Yeah, I mean, Glantus again. It's that business has been around for a while now, and they made, they have this software which brings automation to the accounts payable function, and they made a very clever acquisition last year in the US, where they bought an account auditing company, which basically did manual process, go in, check all the accounts payable, and they normally get paid on the errors they find. And so they can save money for companies. But that meant that it started giving them a presence in the US. I think they've proven that they can, by buying a company like that, which has very manual processes, and applying their own software, they can cut the cost base really significantly. And it was a very, very accretive acquisition. And so the idea behind it is they can do more of that.
Yeah.
But again, it's early days.
Yeah, and certainly I was just looking at the valuation. It's on about sort of 2.5 times sales, etc., and it's largely recurring revenue streams. This sector tends to be going for sort of like for profitable businesses with scale 5 times plus, I think, and It's definitely a new one. As I say, I'd point investors to have a look at that, because Pollen Street Capital and other EVs are looking for roll-ups in this sort of area, and this is as good as a starting point, for them. Another one which was actually in that sector, which is existing portfolio stock, was Rosslyn DataTech, which does almost exactly the same. It's also got a bit of extra software, I think, for its customs management software, which should benefit from Brexit. And I don't know if you've got any thoughts on that one, but they had a new CEO, Paul Watts, if you've spoken to him, he seems supercharged. In fact, I think the management team call him Superman with a K.
Yes, I know. I really like Paul. I think he's going to do very good things for that business. I mean, what they do is very different to Glantus, and that's more of it's a data analytics company. It's not just looking at accounts payable. It's broader.
Yes, you're right.
But it is procurement focused.
Supply chain, isn't it?
They're providing intelligence and means to improve a procurement function in a company through data analytics. And again, its customers reference it very well. But interestingly, they made what I thought was a very clever acquisition.
Yes.
I can't remember how many months ago of that company that's focused on custom software.
Yes.
And that should be really picking up a lot of business now. So we haven't had an update from them for a little while. So I'm looking forward to seeing how they're getting on when they next report.
Yeah, I think it's September, isn't it? Yeah, no, that's a great opportunity. I think for the whole sort of like big data AI side, it seems to be, you've had this sort of reopening trade with corporates. You've had them digitizing all of their communications, and then you've had them digitizing their first line operations. The big data AI stuff is sort of like the next stage, and that should hopefully kick through all of these other, the third level of it. But it's going to happen. It's a matter of when, I think. You've got another one on the healthcare side, which is IPO. Was I don't know if I'm pronouncing it right, but HeiQ Therapeutics, which I think is help sort of like sort of corporates and sort of like improve the through reformulations, improve the efficacy and performance of particular drugs, say by increasing their, basically the life of that particular drug in terms of the duration, stuff like that. But I mean, do you want to take us through the HeiQ?
That one, I can't do that, Paul. Yeah. I don't,
okay, sorry. We'll move on. We'll move on from that one then.
Yeah.
Okay. Dianomi, which I think does.
Dianomi.
Yeah, Dianomi. Yeah, which I think does sort of native advertising and stuff like that. It's sort of like place content, but also it's sort of like advertorials and stuff like that in the finance sector.
Yeah, Dianomi is really a remarkable business. It's made itself with very little capital. We were looking at it for probably 18 months before it floated, and it kept on upgrading the expectations. So when it came to market, we actually thought it was going to be a VC investment, and then for some actually quite annoying and very technical reason, it didn't. It looked like it might not be qualifying for VC, and so we had to kind of give up on that for VC. But we actually thought they'd made so much progress that we bought a holding in our small companies fund. And so what they're doing is called contextual advertising, and the difference between contextual advertising and normal internet advertising that you'll be bombarded with all the time is that contextual advertising doesn't use your data to decide what to show you. It uses the context of what you're looking at. So if you go on to Financial Times or you go on to Wall Street Journal, Bloomberg, you'd expect to see a certain quality of financial services ad, and clearly, you're probably going to be somebody suitable to show financial type advertising too, whether that's products from the top financial services providers. So what Dianomi do is their customers are their customers are both the really high quality content providers, like Wall Street Journal, Financial Times, that kind of thing, but also the top end financial services providers, and they kind of marry the two up. And it's quite interesting. If you look at Bloomberg, which I'm sure you do, and I'm sure most of your viewers will do, you go onto their website, you'll see two types of advert from Bloomberg. One will be the kind of thing you'd expect to see on Bloomberg, kind of high quality financial stuff. And another will be a load of stuff you don't expect to see, but it's just kind of clickbait, trying to almost kind of trick you into clicking on something because they give you a very catchy, either image or headline. And those kind of things are coming from a NASDAQ listed company called Taboola. And you'll see powered by Taboola at the bottom. And Taboola kind of specialize in that sort of clickbait type thing, which they can. And well, what's interesting to me about them is that they've been subsidizing that activity. They raise a huge amount of money on NASDAQ, and they almost pay for this business. But that will run out at some point, and then Bloomberg are going to think, well, do we really want to thrust that kind of stuff onto our people who are looking at? It's actually pretty off-putting if you use the Bloomberg.
Yes, I'm
website.
sure. Yeah, it's totally irrelevant, isn't it?
It's irrelevant and it's nonsense. So, but actually, what Dianomi will do, and Dianomi now are also a customer of Bloomberg's, I understand. They'll be providing the proper contextual advertising for that, the kind of thing you'd expect to see, and wouldn't object to seeing on the Bloomberg. So, in a world where cookies and data privacy is, an area of increasing focus, Dianomi kind of cut through that just by matching the advert to the context. And their next step is going into FMCG type industries and doing the same thing. So, it's very interesting. But, they've achieved quite a dominant position in financial services in a pretty remarkable way. So that's why we thought that was really worth backing.
Yeah, they've got sort of like, it's the Financial Times, Wall Street Journal, Bloomberg, the whole lot, isn't it? And you're right, actually, I hadn't thought about that. But as Google and Apple are banning the tracking of cookies, that's going to stop a lot of the normal, traditional sort of like, advertising and programmatic advertising, whereas Dianomi's contextual adverts won't be affected at all. In fact, actually, you can get a real lift, couldn't it, because of that expertise? You need a vertical expertise, don't you, to be able to do it? I think is probably the key differentiator, isn't it? Yeah. And then if we sort of move on, I mean, another area of sort of real expertise for Amati, and I know you personally, is all the healthcare opportunities. And we have sort of like entered this golden era, and, we talked about it last time. And if we sort of like just touch base on a couple of stocks that I know we mentioned before, Synairgen, I think they've got sort of like this product for a therapeutic to help people recover from COVID in hospital. Do you want to take us through that one?
They have an inhaled formulation of interferon beta.
That's it.
One of the body's. It's a chemical made by the body which regulates the immune system, and they've had this theory for many years that this has a powerful effect on fighting infection in the lungs and the natural sort of antiviral properties when inhaled by the lungs. And obviously, if you inhale it, you're getting it to the right place for that. So they had what looked like pretty good, very good phase 2 data. And we were half hoping that they would get an emergency use approval on the back of that. I think had they been a US company, the US would have probably given them that. We're a bit tougher on our companies, so we didn't give it to them.
I saw AstraZeneca's one. That vaccine's only just got approved. I mean,
unbelievable.
It is incredible. I mean, you don't, nationalisation, I suppose, put America first, isn't it? Trump's strategy.
Quite a lot of nationalism in the world of pharmaceuticals. But anyway, it's a very interesting product. But the phase 3 has taken longer than I think the company would have hoped. As did one of their secondary phase 2 trials, took a lot longer. If the question with Synairgen, and I can't tell you the answer to this, the question is if they get very good phase 3 data and therefore look on track for an approval, how big is the market and who's going to use it? And clearly the number of hospitalizations in very heavily vaccinated countries like ours is much lower than it was. It's not to say that it would be a very useful thing to have a really good therapeutic for people who are going into hospital. And I think that's what it would be used for. The kind of impact that it claimed to have on the phase 2 was that it would reduce your length of stay in hospital. It would reduce your chance of long COVID. It would reduce your chance of complications from the illness or needing ventilation. So very, very powerful effects. Certainly I was saying last year, if I got COVID and went into hospital, I would want this drug. And I'd just take it on spec because, and this is why I thought it would get emergency use approval, to be honest. It cannot do you any harm because interferon beta is in the body already. And, I think that the chances of adverse symptoms from it were very, very, very low. But we'll see, hopefully it will get good phase 3 results. It's not a foregone conclusion. There is risk attaching to that. But if it does get the phase 3, then we ask the question, well, how big is the market now? And the issue is going to be then, this is quite an expensive product. I think they were talking about £2,000 or £3,000 treatment in the UK. Clearly what we're seeing now, and coming back to the big picture, and this is quite worrying now, we are seeing quite a major resurgence of COVID cases with the Delta variant in Asia, and particularly in countries which did an amazing job of just avoiding it last year, like Vietnam, China, where we were scratching our heads thinking, how did they stamp it out? But the downside of that is that you're still very vulnerable to it if it gets back. And obviously the Delta variant being so much more infectious, it's going to be very hard for them to stop it from escalating now. China, we understand, I think the received wisdom in China is about 50% vaccinated. Vietnam, only 10%. And if you look at a country like Australia, which did this amazing job of keeping it at bay, the irony of it is that doing that is kind of useless unless you get your population vaccinated. The whole idea of it has to be vaccinate everybody. But the irony is that because they were so well protected, the population didn't fear it enough to get vaccinated. So Australia's, I think, way behind on its vaccination program.
15%, I think I remember.
Yeah.
Japan's a similar sort of figure as well, isn't it?
Yeah. So those countries, they really have to step up their vaccination programs very fast now. Otherwise, the successful lockdowns they had will have been a bit of a waste of time. So this Delta variant is breaking out in Asia. So then the question is, will Synairgen's product have a market in Asia? You'd have thought it would, but then the price point for many developing countries is just going to be too high. So at this point, I don't know how that's all going to play out, but it would be brilliant if the drug is proven to work and we have another sort of thing in the defense armory for fighting against COVID.
Yeah, I think the whole world is hoping for a blockbuster therapeutic, isn't it? I mean, that's the last sort of piece of the jigsaw, because we're sort of playing this catch-up game on the vaccines to bring the booster shots up to speed to what we think is going to be the awful sort of like next variant coming down the track. But we need that. If we have a therapeutic, then it just allows the world economy to ultimately reopen as it did before and just treat cases.
And we have some therapeutics already. We're much better off now than we were last February with dexamethasone and so on. But if we can add this into the mix as another line of defense, it would be very positive.
Yeah, agreed. Another one which is expecting sort of phase 3 approval from the FDA, I think, is Polarean Imaging, which is sort of like a next generation technology that helps new MRI scanners and also to retrofit MRI scanners to produce better image quality, particularly on the pulmonary heart sort of like therapeutic area. Do you want to take us through that one? Because again, it's how big the market could be. They seem very, very confident they're going to get the FDA nod in quite soon, I think.
It would be fairly extraordinary if they don't get it. So they agreed their phase 3 trial with the FDA, and so the product essentially is for lung imaging. And lung imaging, amazingly, there's no new technology in lung imaging for like 40 years or something like that.
Yeah.
So this is a massive step forward in lung imaging. It takes you from grainy black and white 2D images, which don't really tell you which bits of the lung aren't working, or when they do tell you, so far as they do tell you where the lung's not working, they don't tell you in what way it's not working. And so Polarean are giving you 3D imaging. They'll tell you exactly what the malfunctioning component is, whether it's the lung itself or whether it's the transition of gas across the lung to blood barrier, that epithelial layer. And so it's giving you a lot more information about what's going on in the lung, and you'll be able to pinpoint it in 3D, which of course is hugely valuable. And the other benefit of it is that whereas scintigraphy, which is the old method of lung imaging, again using an MRI scanner, but you get the patient to inhale xenon 131, which is radioactive. Not great. You don't really want to do that every day.
Yeah.
With Polarean's imaging, you use polarized xenon 129, which is not radioactive. So massive safety benefit with the MRI scan. So it's really bringing lung imaging into the 21st century, and it's opening up all kinds of possibilities where, because these images are so good, whereas lung diseases, diagnosing them at the moment is incredibly difficult, and it's a lot of guesswork, and you got to have maybe doctors who've been doing it all their lives might be able to get it right based on available information. With Polarean's imaging, we should be able to fingerprint the different types of lung disease, so that when an image is taken, you can say with quite a lot of certainty, oh yeah, that fingerprint matches this disease profile. And so you're going to be able to bring forwards lung disease diagnosis very significantly with this product. So the trial that was agreed with the FDA was a very simple non-inferiority study against scintigraphy. And the idea that this is not non-inferior to scintigraphy is kind of ludicrous. So, this is, I mean, look, strange things happen in the medical world. So you never say never with any phase 3 approval, but it would be pretty remarkable if this wasn't approved. And there's an interesting kind of spin on what's going on in the US because scintigraphy is so old and the equipment for it's so old. It's not designed with replaceable components. So the scintigraphy machine,
you have to buy a new
pieces, which you can't replace, and they can't because the sterilization process isn't trusted with COVID around. They're not being used right now.
Yeah.
So actually, there is a real gap in the market for doing lung imaging in COVID times.
Yeah.
And we're very much hoping this will go through. There's every reason to think it will. And so the real question with Polarean is how long is it going to take to commercialize this technology? And that's always an unknown quantity with a new young company like this. And clearly they raised money a few months back in order to really speed that up and to put a lot of resource into that already, which is the right thing to do.
Yeah, no, I saw on their broker, I think FinCap, have got a 90% probability of getting the nod, and there's obviously a lot of upside in terms of how big. I mean, you've obviously got the existing heart disease, but you never know with lung disease. You've also got long COVID, haven't you? Potential scars from sort of like long COVID, but. We'll wait and see on that one. A couple of other ones, which is sort of spin out actually, which they've got Trellus Health, which IPO'd I think in May, and then you've got Verici, which was a spin out I think of Renalytics, and Trellus was a spin out of EKF, all coming from that sort of like Chris Mills sort of stack of businesses, which is sort of, but they both got really quite big total addressable markets and some quite neat technology coming out of Mount Sinai.
Yeah, I mean, it's remarkable what EKF have managed to pull together from this collaboration with Mount Sinai. Mount Sinai is a very entrepreneurial hospital in New York. I mean, they don't do any of this for free. Mount Sinai are making more out of this than anybody probably.
Yeah.
But it's very clever what they've done, and they've really found out a very good way of commercializing the incredible science that they have in their hospital. So I think they're both very promising. Early days, of course, but very promising companies. Yeah,
I see. I mean, Trellus Health, if I remember rightly, does it's inflammatory bowel disease, isn't it? Things like colitis and Crohn's. It sort of like does telemedicine, but that deep vertical expertise to be able to help hospitals, and particularly the US insurance companies, identifying those patients that would get into hospital sooner, and therefore they can use their technology and their resilience to identify them, which is proprietary, and also then treat them without the avoidance of getting into the hospital, isn't it? Because that's an enormous cost once somebody has to be hospitalized in a bed to treat Crohn's or colitis, which is often the case.
Yeah, exactly. So choosing the best treatment pathways. But I suppose what's different about Trellus is that Trellus won't be an approved kind of product. It's just bringing together some IP, some technology, which will be, protected in different ways from the usual approval processes. And so that's quite a new thing actually in healthcare, that something that's sitting outside of FDA approval and the sort of more traditional routes to market.
Yeah. I mean, Verici, likewise, I don't think they're going for FDA approval for their sort of like immunodiagnostics, kidney donor, transplant tests and stuff.
Well, those will be approved, and they're already what's called CLIA lab approved.
Yes.
So if you have a diagnostic, you don't have to go for FDA approval. I think they probably will, but you don't have to. You can get the individual labs to do their own certification. But that's a kind of supposedly an equivalence, and it's still a regulatory process.
Yes.
Where the evidence has to be presented, and the CLIA lab have to demonstrate that the diagnostic test is working in the way that it should. So if you think about Renalytics itself, which has been this incredible success story, they have a CLIA lab approval, so they're able to start selling their tests, but they will also get an FDA approval behind that.
Yeah, well, anyway, both of those are really sort of like, another one which sort of came out with some quite good news was Angle this morning, which does their, I think it's circulating tumor sort of a cell analysis, and it sort of harvests CTCs, doesn't it, to improve the diagnosis of cancer. Do you want to talk us through that? 'Cause again, that's a massive market. It seems as though they've got really new leading edge technology that will be able to take a giant leap really for cancer diagnosis and treatment going forward.
Yeah, so yes, I mean, when we came across Angle, it just seemed, I mean, just an obvious thing to try and back really, because you know, the basic idea behind it is when you get a cancer in your body anywhere, whatever kind of cancer it is, cancers, when they develop, they kind of leak cells and they go into your bloodstream, and that's why they think that that's how metastasization works. That's why cancer spreads. So, but it also gives you a way of detecting them. And so instead of having to take a biopsy from the cancer itself, because you don't necessarily know where that is, or it might be very difficult to take a biopsy, you can just do a simple blood test. And then using this Parsortix device, which is what Angle has, and there are sort of alternative methods, but we think the Parsortix is the most advanced and the best one right now. It acts like a kind of very complicated sieve. But so the mechanism is really beautifully simple to understand. There's nothing, you know, to have to be a PhD in anything to understand it. It just sieves out these cells, because these circulating tumor cells, CTCs as they're abbreviated.
Yeah, that's it. Yeah,
they're larger than normal cells you find in blood. So if you have this filtration mechanism, you can just catch them. And the Parsortix device has this series of little channels which get smaller and smaller, and in the end, these CTCs just don't fit through, and they just get held up, and then you can wash them back out. And the beauty of the Parsortix device is that when they wash them back out, they're still alive.
Yes.
And they are therefore analyzable in a way that if you kill them in capturing them, they're much less. You can do less with them.
Yeah.
And so you know, it's a long road for Angle, of course, because they've got to obviously get the device itself approved, and that's an approval we're also waiting for. But then they have to experiment with each particular cancer diagnosis, and so they're going through a series of different cancers. And you know, ovarian's one, for example, that's higher, you know, far down the progression list. They're going for difficult to diagnose cancers, where just using this blood test, they'll be able to get a really early steer on, you know, who's got ovarian cancer, for example, and they'll do it for breast cancer, they'll do it for other kinds of cancer. So the idea is that this simple blood test will, you know, will give you a lot more information about early cancers than any other mechanism.
Yeah, because of the live cancers it's screening out, it gives you that profile, doesn't it? That signature of what actually it is. And I did see I mean, it's incredibly difficult to harvest CTCs, I understand. I have heard it, so it's a bit like trying to find a needle in a haystack of needles. So it's sort of like, I mean, that's one of the reasons why it hasn't really been able to be used properly. It's just a new way of doing it, which is terrific. One which has been slightly through the sort of the wars of late is IXICO, which has sort of like got hit, I think, a bit by COVID, and some of it's in that sort of neuroscience, I think, in terms of the last frontier of sort of like, you know, one of the last frontiers of medical research, where we haven't really made, you know, that much advancement. I think the Biogen drug got recently approved in this area, but frankly has got a lot of criticism by, you know, for doing so. So we're still a long way of finding a cure for dementia, aren't we?
Yeah, I mean, yes, exactly. And so IXICO specializes in imaging the brain, and their work is essentially done on clinical trials for exactly that, you know, Alzheimer's and other neurological conditions. And they, you know, will be a top contender for helping to do the image analysis for any trial in neurological medicine. But you know, the downside of their position is, you know, the plus side, first of all, the plus side is this is an area of chronic unmet need, so there's going to be loads of trials. The downside is it's incredibly difficult to find the drugs, so a lot of these drugs aren't going to work. And you know, so unfortunately for IXICO, their largest customer was running a big phase 3 study. It was going to turn into a phase 4 study. I think
it was Roche, wasn't it? Looking at the headlines, it was
going to turn into clinical use. I mean, it was, you know, and the idea is that actually you still need the imaging even when the drug's approved and on the market. So that would have been, you know, fantastic long-term business for IXICO. But unfortunately, the trial got pulled, and their work didn't stop 100%. So, but it's been much diminished.
Curtailed, yeah.
And that was their biggest customer. But it is a risk of the structure of what they're doing and the nature of what they're doing. So they're always vulnerable to this. I mean, apart from that, they've had a very good year actually. And logically, when one big trial finishes, other things are going to come in and step into that breach, but it takes time. So short term, it's a bit of a hiatus for them.
Yeah, and what sort of IPR? What sort of IPR are they building in terms of these digital biomarkers? Because presumably, if you're an early stage company in this whole area, the information, the digital prints, as you talked about, I think it was earlier, in terms of it gives you that signature, it gives that profile that you can then hone your AI. So when so it improves that whole process and builds up competitive advantage, presumably.
Yeah, exactly. I mean, they're not the only company doing brain imaging. There's a handful of them worldwide, but they reference incredibly well. I think their customers understand they've got something pretty special to offer in that area, so they keep on winning new business when new trials are put forward.
Yeah. Another one which is on the imaging side is intelligent ultrasound, which again has been impacted by elective procedures not being done and all this sort of stuff because of COVID, but is now coming back quite strongly. Do you want to take us through that one? Because it's got plenty of cash and a huge total addressable market. Yeah,
I mean, it had a really interesting history, that one. So, initially they were in training. And
that's right. Yeah, simulation training. Yeah,
simulation.
That's
correct. So they developed this incredible sort of device just for teaching nurses and doctors how to do ultrasound scans, and you could do it effectively on a dummy, and it would the whole training thing was there.
Yeah, that's right.
Adding intelligence to it, so you'd be able to train yourself almost on it, and it would cut down doctor time and training time. And then in order to develop the business, because that's a limited market, the training market. They realized that actually they had the basics of putting together. Instead of just training, they could actually add value to the whole ultrasound process by using artificial intelligence techniques to help identify conditions. And so they've devised a series of diagnostic support tools. So when you're doing your ultrasound using one of these tools, it will give you this help. So it means that you don't need to have super skillful diagnosticians using the device.
I'm glad you pronounced that rather than me.
I probably didn't pronounce it very well, but you can actually have a wider group of people doing the ultrasound and yet still have very intelligent diagnostics going on. And they've just, I think they've now launched the first one, and there's a series of these planned. They're all big R&D projects. That's why they had to raise money. But they're partnering now with the major vendors of the equipment to embed this technology as part of it.
Yeah. Another one on just finishing off the sort of the healthcare area is Amryt Pharma, and they've just completed almost a transformational acquisition. You mentioned this last time, and I thought it was looking cheap at the time, but when you run the numbers, the opportunity here could be enormous, and they're really cashed up because I think the Chiasma acquisition has brought a lot of net cash onto the balance sheet, and they seem to be a very ambitious management team. The share is currently trading, if you believe what the US forecasts have done for Chiasma and add them on for next year into this one, they're trading on roughly about 2 times sales, which for an EBITDA profitable business, or in fact 6 times EBITDA, which looks like frighteningly cheap if you believe the experts in terms of their forecasts.
Yes, probably less than 2 times sales, and that depends on what we think Chiasma is going to be capable of. I mean, it's just fallen into the doldrums. I think it was brilliant to do the acquisition of Chiasma, but it was an all-paper acquisition, so the shares have really suffered from Chiasma shareholders, selling out because they didn't really want to be, they didn't want to own Amryt necessarily. Even though I think Amryt will be a much better thing to own than Chiasma ever was. Yes. But Chiasma developed this neat product for acromelalgia, and it was a reformulation. So there's only one real treatment for it, and it's an injection. They reformulated it as a tablet, got it approved. Yes. And that is exactly up Amryt's street, that kind of product, and their sales force can sell that. There's big synergies. They don't need they don't need 2 sales forces. They can have 1 between the 2 companies. This is just a classic kind of bolt-on product that really fits the bill for Amryt, and it's because of that sort of technical situation where Chiasma shareholders sold, and there were probably hedge funds shorting it to I don't know how these things work in the US. But a a lot of water has to flow under the bridge to kind of sort that situation out. But when it is, it's going to emerge really looking good, I think. So
75% gross margin.
It's not the simplest company to get your head around. It's got 4 products now. One, again, there's a big approval process going on. I think the approval
Oleogel, isn't it, for a skin disorder?
Yeah, and in fact, that's actually what we first invested in Amryt for, from the VST.
Wow.
So the VST made an investment years ago, not at flotation, a bit afterwards, really because we thought that that Fulsivez product, which back then was an R&D project, and it's for epidermolysis bullosa, which is just a terrible.
Well pronounced again.
If you've got it, it's a chronic. It's a horrible. It's probably, of all the things they treat, it's probably the worst condition to have. Incredibly painful, genetic.
You haven't got the protein in your skin to hold it together, have you?
Yeah, so your skin just flakes off.
For young people, it just basically, you put clothes on, it will rip your skin to shreds.
Yeah, and this is not a cure for it, it's a treatment. So, that's the reservation about it. But if it appears to work very well from the, so it's definitely an improvement. And patients say a 20% improvement in the treatment for it would result in an 80% improvement in the experience for patients. Yeah. So, it's actually a very important product. We think it will get approved. Potentially that market is, you could justify the whole of Amryt's market cap if that comes through, but you're not really paying for it at the moment. So we think it's overlooked as a share,
Yeah, I think you get that absolutely for free. I think the management team reckon the total addressable market is worth about $1 billion just for that one skin disorder product if it gets approved. So it's enormous. Another one sort of like, which is tech, which you introduced last year, is which I'd never really heard of, was HeiQ. Now they've seemingly gone from strength to strength, but they've been really sort of like unfairly sold off because of this sort of COVID side, because they're associated with Fiberblock. But they've actually been strengthening their technology and their partnerships. They signed one with Leica, didn't they, just recently? So do you want to take us through that one? Because it seems to be performance enhancing sort of wearables, doesn't it? Clothes and services.
Yes, I mean I just find HeiQ a fascinating business. It's a unique business, really. I think there is another company worldwide which is in the same domain as them and a competitor, but it's not an exact replica of HeiQ. And so HeiQ is really, the best way to describe it is material technology. And by material, we mean textile type technology. So, I've got a HeiQ mask here. And actually this is kind of why the shares have been volatile, that they developed this technology where this material itself uses a technology called Viroblock. So the outer layer and the inner layer of this are antiviral. So when I'm wearing this mask, if viruses land on the mask, they get killed. And that's an incredible technology to have. So, whereas a lot of people say, oh, well, masks don't really make any difference. Well, most masks don't do that, unless you're wearing a kind of military grade mask or a medical grade mask, which will keep them out. This will not only filter the viruses out, it will also kill the viruses. So then if you touch the mask, you're not transferring them to your hands and then to your face. So, that Viroblock technology was huge for them in 2020. And, it was impossible to forecast this year. I think when the virus started waning, people probably rightly assumed that the Viroblock masks were going to sell less this year. Actually, what's now happening is the virus is expanding again in many markets, and just not in actually it did expand in the UK. So virus masks are still a big issue here, but there's almost like a new outbreak in Asia, and it's chronic, and we're underestimating it hugely because it's not part of our experience. But that will push the demand back up for Viroblock. But that thing is swinging it around, and it's not the be all and the end all for HeiQ by any means, because it's like this Aladdin's cave of technologies, and what they have new coming around the corner is always just endlessly fascinating. So as you said, they've been extending their technologies by acquiring a number of antimicrobial technology companies. And some of these are really interesting. Some of them are about killing viruses, like that mask kind of technology. Another one they acquired is actually about crowding out bad bacteria. And there's this really interesting idea that for cleaning surfaces, if you just try and kill everything, it's maybe not the optimal way, because you're actually leaving a completely blank canvas for really dangerous bacteria to land on and repopulate. Whereas actually there's another approach where you don't kill everything, but you populate it with what's called good bacteria.
Wow.
And those good bacteria then make it impossible for the bad ones to have any space and land in, and they probably kill them if they do land. So you're creating this it's like live
That's
yogurt.
Incredible.
And it's like our understanding of the gut is completely transformed now. We now know if you want to be healthy, you need good bacteria in your gut. So this has been tried in Italian hospitals, and it's been incredibly effective at lowering MRSA, hospital-acquired infections. So that's another area of it's very small in HeiQ. It's just one acquisition, but they're becoming quite dominant in antimicrobial technologies of various types, and certainly everything affecting textiles. And I think some of the really big manufacturers are now switching on to different types of antimicrobial technology. So that should help HeiQ in the coming years. On the other hand, HeiQ, like many industrial companies, HeiQ is a technology company, but it sells a lot of advanced chemicals. So, we've got to keep an eye on the supply chain side of things, and supply chains are really difficult worldwide. This is another sort of important sort of theme really across the board. What's going to happen to supply chains? I mean, it's one thing that when we're looking at the macro picture, it's something we should all feel a bit nervous about. We've never really been through a supply chain crunch as we're seeing now. We have to hope it starts to ease. It's not showing signs of easing at the moment. If anything, it's getting worse. I read something over the weekend saying shipping costs were going up like 5% a month at the moment, having already quadrupled. It's
China, I think. It's the Asia, isn't it? It's that whole link, because they just supply so much of the ingredients. And then, you had America supplying a lot of the chip technology that they had to sort of loosen up to be able to allow the big fabricators to do it. But likewise, you've got the whole, until the world gets back, you've got to expect supply chain disruption, haven't you? Which is probably
And in a way, we're going to have unexpected things happen from supply chain disruption. Obviously, the worst would be if food supplies get threatened. And I think you probably read about this as well, but the most extraordinary situation is going on in the world of shipping on the boats.
Yes,
the seafarers who we all completely depend on are not vaccinated. I think there's something like 2% of them have been vaccinated.
I didn't know that.
So when they land at port, they're not allowed to disembark, and this is just from a government policy point of view. This actually is bonkers, and I think the UK could really gain a huge march reputationally by stepping in and saying, right, we're going to vaccinate all the seafarers that land in the UK, because that's going to help alleviate this problem. And there's 100,000 seafarers are stuck on the boats. There's 100,000 stuck on shore who can't get onto the boats, and a lot of them are now past their maximum allowed contractual terms. So that's really not helping this whole situation, and it has to be unlocked. And I'd say, if I had any influence over government policy, which I don't, I'd be knocking on the door saying, you really just have to look at this and solve it, because this is going to cause chronic problems if we don't.
That issue just hasn't got airtime, has it? I mean, again, we need more publicity on that. I might be onto the BBC straight after this and tell them to put a story out, because I've not seen that one at all. One which is another reopening trade that seems to be doing really well is Equals, a fintech B2B business payments. And I know when we chatted last time, I think the shares were probably on less than 30p, and they've almost doubled now to 58, largely on the back of they're really sort of that B2B payments, foreign exchange and forward contract business really flying, even though their other sort of part of the business, the transport side, the payments hasn't moved at all. In fact, it's still gone down. It's still rock bottom, so you get it all for free. But do you want to take us through that one? Because that really seems to be rocketing now. I think the sort of sales of double digits.
Yeah, I mean, Equals it's always been an interesting business, but its problem was that some higher profile rivals came into the market, like Revolut, Monzo, and sort of ate their lunch in their consumer markets.
That's correct.
Before that happened, they were kind of the cheapest and best card you could get.
That was the Fair FX brand, wasn't it?
Fair FX. And I got a Fair FX card many years ago, and when you went to Europe or the States, you'd use it for your foreign exchange, and you're paying a lot less than you would any other way. But then along came Revolut and Monzo and just gave that away, and it attracted millions of customers by completely subsidizing it, and raised, raised hundreds of millions of dollars to do that. Yeah. And Equals was a profitable business and didn't want to go down that road of competing and destroying their own margin. And And so they started to go into, they accumulated lots of different business lines, and it became a little bit of a magpie, just bringing everything into the business. And what it really needed was just focus on, well, where are you going to really make your money, and which of these business lines are you really going to pursue, because you've got to go big in something. Yeah. And I think what's happened over the last year is they're just bringing that kind of focus to it now. So we're starting to see some real growth in some areas, and that's what it needs. They don't have to succeed at everything, but they've got to focus on the things they really want to succeed at and drive it. So we're seeing good recovery in the shares now. Yeah.
Another one which has still had a good recovery is Accesso, which is the sort of theme park software business. I think Steve Brown came on board as a previous CEO last year, who I absolutely highly rate, and they seem to be rebounding very strong. Not surprisingly, theme parks, as they were closed, they suffered their sales, but it now seems to be sort of really sort of motoring. Do you want to take us through that one?
Yes, I mean, again, world-leading software for ticketing and
queuing as well, isn't it?
Queuing, queuing and ticketing. Two really key areas in a normal functioning world. Not very key areas in a lockdown world, because we don't do much of either. But so it's a classic kind of reopening stock. And but with really good technology, as you say, Steve Brown coming back in as CEO was a very talented CEO. The business needed that kind of it was kind of lost its way a bit, and it needed the leadership revitalizing, and that was the perfect solution. So actually, we think it's a really good opportunity for opening up.
Yeah, I mean, it's got great customers, hasn't it? I think Six Flags, Cedar Fair, Alton Towers, the Legoland. I mean,
it's can't the world-leading business really for that kind of ticketing and queuing management. So
another one
both of those things are great areas to be in.
Another one with great sort of management, as really entrepreneurial, is Catebox, because I touched base with the CEO, Sukha Chamdal. And he's mid-60s, but he absolutely loves it. New products and sort of like testing the services and all. I mean, he's such an entrepreneur. Because I know the shares have done well, but hey, I could,
he kind of is a really good case study in why we love businesses that are still run by the entrepreneurs who founded them. Because they bring such care and attention, such energy, inspiration, always thinking of new things. And and the way Catebox handled itself through the pandemic is just exemplary, really. They did everything right. They signed up with Deliveroo just as in February before lockdown even started. They knew they were going to have to switch the business model quite a bit. The fact that it's a franchise business as well, these kind of franchise companies, when they're well structured and run well, they can do phenomenally well, because the franchisees themselves bring huge energy and commitment to the business, because it's every one of those franchises is a small business of its own right. And so it's a business we're still really keen on.
Yeah, I know they've got a huge adjust. I mean, I know they've grown a lot. I think there are about 160 stores or kiosks at the moment. But when I spoke to them about a couple of months ago, they were saying they're looking for 400. I mean, they've got really aggressive. That's just in the UK. Never mind international opportunities. So I think there's plenty more sort of like runway on that one. And then just finally, one which is it's sort of like it's been a sort of like a stock that you'd expect it to do really well, but if this time might have come, is Sosander, which does sort of like I think it's women's online fashion, but not competing against the likes of ASOS or Boohoo. It's a sort of like more of a, once you've sort of migrated and matured away from sort of like 15 pounders sort of sweatpants, you move on to sort of like something a bit sort of like more stylish potentially. Do you want to take us through that one? Because there still seems to be a lot of gas on that one if it can get its business model right.
Yeah, and it's, again, a couple of really talented entrepreneurs who founded it.
Yeah.
And like a lot of businesses, it didn't have a sort of absolutely straight line to success. It's had to kind of
it's taken time.
A few false steps here and there.
Yeah.
And as you'll know, it's raised money a number of times on AIM. And I think what I understand, and as one of my colleagues is much closer to it than I am, but what I understand is that where they've really found their feet is through sort of little franchise operations within larger stores, like John Lewis, for example, now have a Sosander section, and that's been hugely successful for them. So it's slightly, they're able to piggyback or by getting their product into much bigger retail outfits. And that's why they've seen phenomenal growth in the last year. And that's really why the shares have picked up. And you're right, there's loads more potential. And hopefully that business has turned a corner that will carry on with its momentum.
Yeah. And then just finally, just sort of, the opportunities, obviously, I think you're a bit like me, who's positive on the sort of the outlook. And the funders, obviously, or the funds, the Amati funds have done terrifically over the last 18. Where are you likely sort of like, putting your dollars going forward? Not particularly stocks, but just sort of areas. Is it going to continue to be the healthcare technology where you see good value type of growth? Good growth, no, good GARP stocks.
Yeah, I mean, I think we have. You never want to kind of get too overconfident about knowing what's going to happen next, because this is a very, very unpredictable world. So we try to put a lot of emphasis on being diversified and not having all our eggs in one kind of company only. Yeah. And that includes not having everything in sort of just super high growth, which in the right times is, the best things you can be in. But they're also, obviously highly rated and pretty interest rate sensitive. On the other hand, you have to have I think you do have to have a big chunk of your money in what we call innovative companies. So we're really looking for companies that can benefit from the things that are now the big industrial trends that are taking place, and they go across a broad swathe of companies. Yeah. But we're looking for a very diversified exposure to innovation across the board. But it also means that we're cognizant of the cyclical upswing in the UK economy, and the fact that the UK economy has been derated to many others. Yes, possibly as a result of the whole sort of Brexit kind of hiatus, and lots of things were not clear for a very long time, and we're kind of paying the price for that a bit. But actually, many things. There are many reasons to be optimistic in the UK. That the vaccination program being probably right up there in importance. We've solved a pretty big problem with that, and so we should be able to sustain a much more open economy now than perhaps some other parts of the world. So actually, maybe the tables are going to turn back a bit. So we've been looking at that quite hard, and some of our investments are very much targeting that sort of stronger position that the UK is hopefully going to find itself in, shipping notwithstanding, because we're an island, we need the shipping to work. Yeah.
So. Well, I mean, the technology clusters, i.e., things like Saietta and people like that, must help that whole that upskilling. So anyway, thanks very much for this time, Paul. Terrific insights as always. I'm really looking forward to hearing what the portfolio's been buying in about 6 months' time.
Brilliant. Thanks, Paul. Great pleasure to join you.
Cheers.
Take care.